Hello, and welcome to Leviathan News Network. I'm Sam, and I'm joined by Garrett and also Rex. And today we have a newcomer. Noah Simon is here joining us on the show. Welcome.
Pleasure.
Yeah. So to kick things off right away, we got some big news. Yesterday, the U.S. Treasury Department put out a new publication called the 2023 DeFi Illicit Finance Risk Assessment. And in it, they pretty much blasted DeFi for being involved in money laundering, being best friends with North Koreans, and just making everything bad in the world, so this is 2023, guys.
It's funny, though, because if you read through the report, it wasn't quite as bad as the headlines would have it stay. If you get into it, they actually acknowledge that DeFi and cryptocurrency is not the main vehicle for illicit finance. It's still the good old-fashioned U.S. dollar that's being used in most cases. Mm-hmm. So I thought that was a nice inclusion.
Everyone must admit it's the amount of currency units in all of crypto, including value in Bitcoin, is relatively zero, considering the total global amount of currency units in circulation. So you cannot engage in any significant degree of capital transfer using the crypto markets from a nation state scale type of perspective.
Yeah, as long as they crack down on the centralized exchanges, it's really hard for people to cash out. It's just always going to be like that. Nobody's going to do P2P transfers for suitcases of money for millions of dollars, right? In exchange for Bitcoin. That's a good way to end up dead.
Not financial advice.
Not financial advice. Or abducted back to North Korea or something, like the best Korea. Moving on to a different part of Asia, Conflux Network, which is the only regulatory compliant permissionless blockchain network in China, and issuer of a CNY stablecoin, requested a curve gauge. And I guess this is pretty significant. Garrett, we'll let you leave with this since you're the curve maxi expert guy here. What do you think about what's happening with Conflux?
Yeah, what's sad about this is this dropped after I kind of was done with my article writing for the week, so I haven't got a chance to dive into it. I'm expecting to kind of go into a bit more depth Monday, Tuesday. But the Conflux team actually reached out to me and asked if I had any questions and offered to chat with me. So I'm really interested in diving in. I still don't understand what exactly it means by regulatory compliant, because I'm assuming they mean Chinese regulatory compliant, which I imagine would be exclusive of being U.S. regulatory compliant. But it does kind of track with a lot of the things I've heard emerging from the Chinese region, which is that for whatever reason, they're trying to open things up through Hong Kong as their conduit to allow mainland Chinese investors to start getting more into investing in cryptocurrency. That China really wants Hong Kong to be competitive with Singapore, and as such, they're kind of being more loose and open with cryptocurrency. But one of the reasons that I even thought to bring Noah on the show here was he had a really great take on this. I'd like to hear him talk a bit more about it. Let me see if I can pull up his tweet here, where he wrote, liabilities are apolitical. Geopolitics politicizes and weaponizes them, but liabilities always find a way. I just laughed out loud when I read it. Noah, would you you want to go into a bit more depth here?
The imagery that came to my mind was like a Jurassic Park. Life finds a way, so liabilities find a way. Liabilities are credit, and in obviously the status quo system, credit is money. Most people don't use paper currency. Most people are transferring liabilities around. Now, it's apolitical. So obviously, from a sovereign's perspective, the U.S. and every country wants to exert control, but they want to exert their opinion, their intention, what their goals are, and then currency management and the capital controls, the restriction of financial activity is a very powerful political way to exert pressures. Now, DeFi, it's an overused terminology. These are currency markets. And it's not a U.S. market. This is an emerging market, but it's an emerging market of emerging markets because of all the various networks where currency can flow. and attain velocity and expand via the process of credit creation, which is what every country does, which is what every market in traditional finance does. So this is meaningful because all stable coins are a process of liabilities creation and currency expansion, even USDC, because if they're backed by treasuries and you have a dollar liability in circulation, there's no dollar paper bill in custody somewhere. So that is the increase of currency units that are available to execute economic activity. I'll try and keep it short, but I follow Peter Zeihan a lot, and demographics really force a lot of countries to do things that demographically strong or demographically stronger countries don't really have to consider. And that's like kind of the position of the US. Other countries that are in a demographic decline are kind of forced to do more radical things. Now, obviously, there's traditional finance turmoil all throughout China over the last year as the Fed has raised rates. So this is, I think they're seeing as an opportunity to explore new financial opportunity. And credit creation, liabilities creation does that. More currency units, more economic activity, more capacity for productivity, and frankly, they're in a position where they desperately need this type of thing to flow through their economic system.
Yeah, I'm really surprised that they're pairing with ETH, actually. I would have assumed that they would have paired against some sort of like dollar coin here.
Well, so while we've been discussing, I pulled up their forum post and read a little bit more, and it's actually, there's some like really interesting things worth breaking up really quick. First and foremost, it's its own independent chain, which is a proof of work and proof of stake hybrid, which I think is interesting. Also, this company has been funded by KuCoin and by Circle, so like this is more about like the holistic system than it is about like China making a play, although China may or may not be making a play. But I just think it's a good thing that like real legitimate people that are like trying to make crypto have a real world footprint are involved, and this isn't just some like random thing by like bureaucrats who don't even understand what we're doing and will disappear tomorrow.
But it's CNY. So what is the significance of that, other than the sovereign, having intentions? Who uses CNY? That's China, the Chinese economy, and it's predominantly domestic because China restricts capital outflow as best they can. And this, if you can have credit creation in that denomination, you're going to increase the capacity for capital to flow in that denomination. So that's the significance that I see.
Yeah, I think this is going to be an interesting one. Now that the regulatory screws are tightening on U.S.-based stablecoins, we might see some emergence of some non-U.S. based stablecoins like this CNY one.
And sorry, just last
thing. It is
thing
interesting to note that. Oh yeah, go ahead, Rex.
Oh no, sorry. I was just going to say they're probably pairing it against ETH because since it's not a U.S. stablecoin, it's going to be a volatile pair anyway, and like your choice is basically USDC or ETH, and what's the difference?
Yeah, exactly. But even with all the different introductions of all these other stablecoins, there's a Euro stablecoin, there's a Swiss franc stablecoin that I've seen. They still represent less than like 1% of the actual trading markets across the entire industry. So. Maybe this regulatory crackdown will lead towards a broadening of people outside or wanting to use something other than the US dollar on crypto networks. But for now, the dollar is still the incumbent and it is still king.
And just one quick point of clarity, they're not actually doing a pool for CNY versus ETH. It's a pool for their governance token versus ETH. Their governance token through whatever mechanics they use to mint CNY. So there's a stable coin in the mix somewhere.
That's the collateral.
Yeah.
Yeah.
All right. Garrett, I think we need some research.
Maybe we can have them come on for a quick interview at some point.
I'll bet we could get them on Monday, in fact.
Yeah. So moving on to the next thing, we had some really fun interactions taking place on Twitter this week where one of our favorite on-chain detectives, Zach XBT, started a sparring match with Kyle from 3AC. And essentially he was saying, "Dear Zach, I've seen a few of your comments lately. More than happy to jump on a call with you and answer any questions about 3AC. Warm regards." And then Zach comes back and says, like, "Hey, have you actually seen the liquidator attempting to reach you on Twitter? Just in case you lost their letter, I've attached it for you."
Oh my God.
Yeah, I mean, welcome to.
I can't believe this site is free. Yeah.
Well, I don't know. Welcome to post history, I guess. I don't know. I mean, this is how we operate. Like, I don't. Yeah, I don't. No words.
I know.
It speaks for itself.
It does. It does.
Would you all have invested in Kyle Davies, Suju's new venture?
No
Oh,
way.
no.
No.
I
I would have. If I was a VC, I would have.
Why?
Because
tell us.
you know that there's going to be other VCs out there that are going to join the round, so you know that it's going to get filled. Like, it seems like kind of a no-brainer.
I don't know. I think for me, I would have like been such a sucker and felt for 3AC, but after watching what happened, and just like their startup is like, let's see if we can get money out of the zombie. Like, I don't want anything to do with that.
Oof. Brutal.
So next on the list, we had the announcement of the Dinero stablecoin by Redacted cartel. This has been something that's been brewing for a while. It integrates ETH staking along with a new stablecoin. So it's great to see that they put out their light paper. Did you guys get to check it out at all?
Yeah, I've been following this for like over a year now when Sammy first started leaking Dinero as a stablecoin, and it's cool to see how far they've gotten from there, but honestly, I was pretty underwhelmed by the white paper, and also just so many companies are releasing these ETH staking products that are essentially like talk about vertical integration and private transactions and all this stuff, and that's how we're going to get extra MEV revenue, and it's just like, have you been paying attention to how we've been building Ethereum? And like the whole MEV boost and proposer builder separation concept like really negates a lot of these like incremental things that we're talking about, whether it's Manifold or Redacted or like the whole horde of LSD protocols that are coming. And so, you know, I hope Redacted, like, I can't wait for the actual white paper to see what they're building. But, you know, I have to say that, like, I am very underwhelmed by this, like, this latest round of LSD protocols after, like, Lido and Rocket Pool and stuff, because, like, it seems like a lot of buzzwords and a lot of, like, trying to bring some of the things from traditional finance and, like, just paper it on top of MEV or validators, and, like, I don't really see the substance yet.
Well, ultimately, stablecoins are what banks do. Dollar deposits in a bank account, and you log into chase.com, and you see a number on a screen, a digital number, that is a stablecoin, which is conceptually fascinating that most folks don't really feel and digest. It's not backed by a dollar, it's backed by it's backed by the balance sheet of the bank. It's backed by the treasury of the bank and their capacity to liquidate treasury components if someone wants to withdraw dollar liabilities, act on their dollar liabilities. And if the bank needs to get dollars to service those dollar liabilities, they need to sell some of their treasury. So ultimately, that's what many protocols that have treasuries in the crypto space are seeing as obvious. And Redacted has a very, very large treasury. So what does a bank do? It's equity access.
Totally agree with you in terms of your point about stablecoins. I just don't understand what this has to do with ETH staking.
Oh, from an Ethereum perspective, Ethereum staking is risk-free, denominated in Ethereum. The only risk is actually the functioning of the network and that it remains existing. This is what Raul got wrong when he was talking about Luna. It was risk-free denominated in Luna, and the protocol failed, so boom, that value's gone. So that's the same concept here. And if you could access the nominal, the dollar value of the Ethereum deposit, you have self-paying loans because it's a productive asset. It's akin to a bond because it's producing an APR, and that's meaningful from a capacity to expand currency. When you expand currency, you have more financial activity, you have more velocity, you have increased lending and borrowing, and that's generally what I like to look at with regard to how the health of a financial market. So when I see these stablecoins start to want to come online, I'm seeing the groundwork being laid for subsequent runs or subsequent periods of increased financial activity when there's increasing liquidity to circulate through the system. It's good to see these things.
So I think it's interesting. I'm going to have to dig into the light paper over the weekend, and we're trying to set up a interview with Sammy for Flywheel, I believe next week. There was some good responses, also some tepid responses as well too. Coiner, the founder of Glow, another stablecoin, said things started off intriguing but ended up quite boring. He called it a DAI clone with some RPC stuff attached to the side. So, I mean, everything that you guys were saying was right. Everybody needs more credit, and everybody wants to have their own stablecoin, right? Because then they get to take part in the fees. It just makes sense, especially when you have a large treasury.
There's not going to be serious, like a new paradigm of a stablecoin. Everything's going to be marginally iterative, based on the simple premise of collateral and a liability against that collateral.
Of course, like no, I don't want to take away anything from Redacted. They are building a very, very interesting, basically Aave clone with as Sammy said, as with some RPC functionality. Nothing should be taken away from that. But I think we should all be honest about what it is and what it's not.
Yeah, everyone does. They hype their protocols. They throw on the memes. They throw on what they think is innovative. And in the end, like Redacted, it's just a fancy ETF with a productive treasury of various revenue-producing assets. And I mean, that is exactly what Tether is. It's a productive treasury of revenue-producing assets.
I think Redacted would take issue with that. They definitely don't consider themselves an ETF. They're builders, and they're trying to change new paradigms. But I don't know. This is getting a little tangential.
Well, speaking of new paradigms, and we have a new monthly winner in the TVL changes on Ethereum. It's a fan favorite here at the show. It's Conic Finance. That increased 56% over the last month. They have $85 million of TVL now, and they look to be one of the hottest new decentralized applications working in the Curve ecosystem. Hands off to those guys. They're doing a great job over there.
I didn't expect it.
Yeah, I know. It's pretty cool. I participated in the, whatever it was, I sent some ETH and got some CNC, but it's really cool to both see projects building and growing and continuing through the bear market, but also it's just so cool to watch our favorite protocols like Curves become platforms for the next generation of protocols. And so I just this is composability. This is DeFi. I just love Conic Finance, not even for what they're doing, but because they understand why we're here.
Exactly. Yeah, they're aligned with the Curve mission and ecosystem, and they just seem to get the broader community. Now, you also said
that's nailing it in the bear market. I'm so excited for what they're going to do in the bull market.
Indeed.
Now, just to wrap up with a couple of more quick points, someone forgot about the lack of a transfer function on ZK Sync when they were deploying their contracts, and now 921 ETH, or about $1.7 million, is stuck forever. So check your contracts, people.
This is
also Llama Risk. Yeah, go ahead, Rex.
No, sorry. I was just going to say, there isn't a very important distinction between EVM equivalence and EVM compatibility, and we just learned it.
Yeah,
exactly. Also, there's a great new report by Llama Risk on the LVUSD stablecoin. They said that if OUSD pegs and LT's position can become insolvent, Reserve Protocol announced a new plugin for Lido and Rocket Pool. And then additionally, Sushi, now that UniV3 is available to use by anyone, has announced their UniV3 fork, and that it enables multi-network and cross-chain infrastructure. So good to see Sushi coming along.
That was my in 2021, December 2021. I posted a couple of thoughts on where we were heading, and obviously 2022, everyone was nailed to the wall. But seamless cross-chain was just written on the wall. This was before Layer 0 when mainnet, and we had early signs of something with like multi-chain XYZ. That was before the brand swap. That was all Andre's type of work. So it's come an extraordinary way. Layer 0 is on fire with transaction volume. It's interesting.
They're doing a great job. But I think that's going to be a good time to wrap up. Guys, why don't you lead us out? Noah, where can people find you? You're the guest of the show today.
Well, Twitter, YouTube, and that's as simple as that. I keep it short and sweet. But Twitter is where that's my place for thoughts and expression. So say hi. I'm always there.
And also good to see you too, Rex and Garrett. Where
Everyone,
can people
check it out. I'm doing a live llama party this morning with the great Fiddy. We're going to talk a lot about stuff. I have questions about MEV, which he's a big fan of. Well, not a fan of MEV, but a big follower of it. So join in.
What about you, Rex?
Well, Rex, you can find me on Twitter, Solomon Crypto, and yeah, thanks for joining us.
Amazing. So we'll just wrap up there. This is Leviathan News and April 7th, and we will see you again tomorrow.
Pleasure, everyone.